Firstly, to put everybody's mind at ease, this first phase expansion of ours are totally taken care of with respect to proper facilities that are in place. We have drawn down about a third of that facility at this point in time. Having said that, when we took over this operation, the operation was cash flow negative on operational level, and we wanted to get into a cash flow positive position on operational level firstly as the first objective. So I think the mine we're making in the region of about 70 million rand a quarter loss when we took it over. By December of last year, we managed to stop that bleeding and were operationally cash flow positive in December, as I say. We have the next objective to become cash flow positive after our capital projects, and that will require another sort of 60 to 70 million rand a quarter. And I can say to you that our target is that we will be there by January of next year. So right now we are making money on operational level, and we are funding some part of the capital expansion projects already. So having said that, we do have facilities in place should anything happen to the basket, and I think to that extent our risks have been minimized to a great extent. But I would rather be in a position where we generate enough cash from operations not only to cover our capital projects, but as mentioned, we need to start repaying our debt, and I think that 2011 would be the year that we start repaying the interest on our debt. Look, I think the good news is that the restructuring is behind us, because that, as you know, in the South African context, very problematic and very traumatic for everybody involved. We started the restructuring at the beginning of the year, and we completed it in April of this year. So it sort of just extended past the first quarter of this year. We moved about 20% of our workforce around, so in our life it was very problematic and disruptive. The April month was therefore one of the more difficult months that we went through, and certainly impacted on production both in terms of ounces and tons. But it is now behind us, and in the May month and the June month we've already seen some nice improvements. And as you rightfully mentioned, you know, the sort of 24% increase on tons was a nice improvement against the previous quarter, and just demonstrate, you know, how disruptive it does become to the operation. If we look forward, we're on a steady increase now, going over the next 2 years, doubling the mine production. That is our phase 1 expansion. That'll take us up to about 160,000 tons a month, or about 2 million tons per year. And it takes our production ounces up from about 120,000 ounces to about 240,000 ounces. So over the next sort of 2 years, you'll see a steady ramp up every quarter, and the majority of restructuring has been completed. The basket price increased by 6%. That was very welcome. But having said that, you know, the current price that we've got, we believe that we can have a decent margin at this price. Moving to the concentrator, a part of this upgrade that we've done to allow us to double production over the next 3 years was to upgrade the concentrator as well. All of those upgrades were completed during the first quarter, and this quarter we were commissioning those upgrades. As you know, during commissioning, not everything goes smoothly, and that's sort of why you saw a difference in the recoveries for this quarter. I'm happy to report that there was no design problems in what we've done. It was mostly operational in nature, and as I've said, the April month was the big problem where our recoveries dropped to the lowest position. Sort of from there in May recovered very nicely, and in June much better again. And I can say to you now that those recovery problems are behind us. We've managed to sort of resolve it again. As I said, it was operational issues in the commissioning. I foresee a steady increase in the platinum basket as a whole. We've already seen over the last couple of weeks just how quickly the palladium price sort of ramped up, which is, in my mind as well, directly related to the stockpiles that have been depleted. So our future view on the basket price is positive in nature, and over the next 18 months we should see it continue growing. The sort of focus with the future with respect to growth potential, we sit on the third biggest platinum resource that still exists in South Africa, and have control over that more than 200 million ounces. So as far as organic growth is concerned, there are substantial growth opportunities for us. But once again, we need the capital to grow those projects, and to that extent, we need the track record to go to the market. Between the Bokoni asset and the Gapasha asset, which is contiguous to one another, we've got 26 kilometers of strike length on both the UG2 reef horizon and the Merensky horizon. And as you know, we are mining both reefs in this mine. That is the core focus area that we would like to develop first. 26 kilometers in strike length is similar to what Impala has got in the Western Limb. So it's a very vast area. The Boigansu project, which sits on the Northern Limb, is a different type of deposit, lots of nickel credits that you would have there, and it's an open pittable deposit. And we are currently busy with studies on it, taking the scoping study that was done, taking it to a pre-feasibility stage, just to get a proper value and take it up the value curve before we get to a position where we take a decision whether we will grow it or develop it ourselves, or whether we would sell it off, into the wider market. Selling it off obviously gives us an opportunity to repay some of our debt prematurely, which just improves our position to grow the Bokoni and Gapasha assets much more rapidly.